when we look at the growth forecasts, we're actually not looking. We're not looking at any growth forecasts. So there's no growth forecast with Canopy Growth Corporation, and then also there's no the earnings per share is in the negative range. So this is bad news over here. So hopefully they can turn a profit and enter the positive range. That's what we're hoping for with Canopy Growth Corporation. And look right here, Canopy Growth price of 53 is now below the lower Bollinger Band, indicating a positive signal. So that's one positive signal. We could check out that website, canopygrowth.com. We'll check that out in a sec, right guys? So we know Canopy Growth Corporation is a marijuana company. It's based in Canada. The company, through its subsidiaries, Tweed Inc., Bedrock Canada Inc., Tweed Farms, is engaged in the business of producing and selling legal marijuana in the Canadian medical market. It is also focusing on producing and selling marijuana in the recreational market in Canada. Its core brands are Tweed and Bedrock. Tweed is licensed producer and medical marijuana. Tweed's commercial license covers approximately 168,000 square feet of its Smiths Falls facility and allows Tweed to produce and sell approximately 3,540 kilograms of medical marijuana per year. Tweed's built-out production capacity is over 10 climate-controlled indoor growing rooms. Bedrock is a medical-grade cannabis. Bedrock's over 52,000 square feet production facility in Toronto. Toronto is licensed and includes over 30 vegetative and growing rooms and over 3 dispensing rooms. And you can see the brief for the 9 months and the 2018 Canopy Growth revenues increased from 55 million to 132 million. Net loss increased from 8.8 million to 350 million. Revenues reflect revenue increase from 21 million to 98 million. Net revenue increased from 47% to 49.2 million. Higher net loss reflects share-based compensation expense increased from 17.7 million to 108.2 million. This is the expense. Sales and marketing increased from 23.5 million to 101.2 million. This is the expense. Now, when you look at the detailed statistics, the cash to debt level, we're talking about 18,057 million. When we were talking about the market value, we're looking at 18,371 million. When we look at the net cash, we're looking at 314 million. So the net cash equivalent to 2% of the market value. So far, these are all good. The sales forecast, 78 million last 12 months. Forecast sales is 243.5 million. The net profit forecast, this is where things are bad. Minus 523.1 million in the net profit forecast. That's not good. The price of sales, 231.5. And the return on equity is minus 7.8%. That's also not looking